Hi, this is Mac with PriceActionTradingSystem.com, and this is our chart lesson for Monday, November the 14th. And I want to start off by giving you a look at our trend line, how I found the trend line today. As you can see, I'm always telling people I usually try to find it off the first two swings of the overnight, which happens to be off the high today. And I basically drew it off those lines. You can see it was a nice match. And you can see it came into play here perfectly later in the day, and we got a couple of nice trades off of that. And but that's how I got my trend line. We actually, basically what happened was prices went into a trading range. You can see that range right here, and you can see it held prices fairly well for most of the morning before the sell-off started again. So what I would expect to see is probably another leg that's equal to this leg, measured over here. Of course, nothing's ever guaranteed. We did get a trend line break and a couple of legs down to a new low. But generally what you'll find is you will get a second measured leg that's equal to the first leg. And I would call from this point to right here or here the first leg. And then we would measure off that swing high right here, which would probably be here or here, and then a measured leg on down. So that's yet to be seen. There's still about an hour to go in today's trading session, so we'll see how the day ends up. But that's what I would be expecting if we don't bounce off this double bottom right here. So, but let's get into a couple of the trades today. Believe it or not, I'm still struggling with this cough, so when I start talking a lot, it really starts to bother me. So, if I cough a little bit in here, I'll try to pause it when I'm having issues. But if I don't, I apologize. So bear with me on my cough and my throat that just seems to be driving. The weather's been crazy around here. But anyway, back onto our trades. Let's go to our first trade right here. The market opened up right in this area right here. And as you can see, there's 1, 2, 3, 4, 5, 6, 7, 8, 9 overlapping bars. Most of them are dojis. We pretty much had a little double top across here. And I always tell people, don't enter in these congestion areas, because what happens is prices generally break out, fail, and turn back down, or turn back up if they break out the low side. And you can see exactly what happened. Prices broke out the low side, failed, went up, broke out the high side, failed, and turned down. And generally the bias will be the way prices traded into the congestion, and we traded down into that. So I would expect, just like on the bigger picture, I'm looking for another leg down. I would be looking for another leg down right here that's similar to that one. And you can see we actually got that leg and then a little bit more before prices reversed. So this is our first setup. We had a breakout of this congestion here. It's really a two-legged move. There's your first leg, pull back, second leg. Prices were not able to break lower yet. They attempted to go higher, broke out above this high here, trapped longs, turned down, and that's where we want to enter. And we want to enter here because of this trap, basically, and because this is a failed breakout of this trading range. So this is similar to a second entry short, and you can see this was a great entry as prices sold all the way off. And if you'd have just moved your stop down below the close of each bar, you would have gotten out almost at the low here. So the entry was around 57 or so, and the exit was down here close to 50. So that's a 6 to 7 point move right there. And if you were trading multiple contracts, you probably already had a nice trading day right there off of that first trade. So that's trade one. Here's trade two. I drew this one green. This one's questionable. It's not a really great setup, but it was still good for a scalp, which most two-legged pullbacks to the EMA are. And you can see here we actually had a failed break below this double bottom, or this support area right across there. You can see where all these prices have bounced several times. We broke below that, failed, went higher, tried to go low yet a second time, and then turned up. And you really could have gone long right here, but I don't recommend that trade after a strong move down like that. But by the time prices were actually turning back down here, we had too many overlapping bars. We had a bunch here. We broke higher, then we had a bunch here right at the EMA. In order to make this trade work, you actually had to go low below that doji right there. And if you entered right there, you would have gotten a scalp. It was good for a scalp. But that was all you would have gotten before prices reversed. And we know the trend line is up here. And this last pullback never touched that trend line. And so I'm expecting prices to still want to try to come back up here and test this line at some point. So that's a couple of reasons why I didn't like this short. Mainly it was because of all these overlapping bars and so forth coming up through here. This is just not a great setup. By the time you got this big bearish bar, maybe, but then it's too close to the low. It's too close to back to the trading range here. So this entire setup just was not a great setup. So if you took it, you could see that it would have worked. If you took it below the doji right there, which is the only place I would have even considered entering here for the reasons that I just discussed. But if you took it, it was good for a scalp. But if you didn't take it, not a bad move either. So that's the reason I didn't color it red or blue. I colored it green because it was an iffy trade, and really depending on how you saw it, whether or not it would have worked out. And we got this next trade here, which was another short. And if you look here, this is a two-legged move. There's actually two legs in each move, though, so it's kind of a stealth two-legged move. But there's leg one, and then there's leg two, and we had a failed break up above that second leg, and then the sell-off. But the real reason I wanted to take this trade here is because it was a bounce off of this trend line, and you really needed a bearish bar. But by the time prices broke lower, we did have a bearish bar there, and this was another easy scalp. As you can see, it was only good for a scalp. No big runners there or anything, and if you held on, they would have been stopped out on this pullback. But we actually got another great entry right here. And by this time, it was fairly obvious that we just kind of had a trading range going on here. So I would have been definitely nervous by the time prices got down into here and started getting all these overlapping bars. That would have been a good reason to think about just exiting the trade, especially once it hit this bottom and turned up again. So, but back to this trade, it's a second entry short. You got it's actually a failed second entry long that turned into a second entry short. You got your new high here. It's higher than this high. We pull back, we break higher, we pull back again, we break higher the second time, and we fail right at the EMA, or right at the trend line, and turn down. So we go short right below there. And this was another 1254 entry or so, all the way down, back down close to 1250 again. So it's another 4-point move that you could have got out of your runners if you held on. But again, when prices started, all these overlapping bars right in here, I probably would have looked to find me a reason to exit and just gotten out and let that be that. Because when you start getting all this overlap, we just got congestion. And that's where reversals can happen and crazy things can happen out of that. So better just to exit. But here's our next entry. I'm going to probably talk about these last two here and call it a day. I'm trying to get these videos down to 10 minutes, and so I'm working to do that. But here's the next entry. It's a second entry short. You can see here's the first leg back. It was a two-legged move here, but there was no good entry here because of the 1, 2, 3, 4 overlapping bars. 2 of them are dojis. That's a trading range, and we don't enter in trading ranges, so just wait for something different to happen. But that's the first break of the trend line, so no reason to be thinking long here. So when prices came back up here and tested this high again, where we've turned down several times and immediately reversed on a second entry to boot, that was a great place to enter. And this was about a three-point move or so before prices bounced again. But this was a nice entry. We had a nice reversal bar. You see the pullback right here. There's the first bar that broke lower. The next leg back, and there's the second leg lower. So that's your second entry short, counting off this low down here. And then we had we had a two-legged pullback and a second entry long on a smaller time frame. Plus, we had a trap right here. So you could have actually gone long right here, gotten just enough for a scalp, but I didn't mark that trade. I didn't like it. As you can see, there were 1, 2, 3, 4 overlapping bars again. One of them's a doji. So it's just not a great place to be entering. And you can see prices didn't take off. They pulled back again and then went a little bit higher. So it's just a lot of chop and overlap. And if you stay out of that, you keep yourself out of bad trades. At the very least, wait on a trap before entering. And that's exactly what we finally got here. We had all this overlap. But look, we had one leg up, pull back, a second leg up, and then boom, prices broke lower there. So that was a second entry short right there, counting off this low. But this wasn't a good entry because we still had all these overlapping bars. So as you see, prices broke lower, tried to go up again. And when prices broke higher right there above that bullish bar, that caught a lot of people off guard. And when prices turn back down, that's a long trap. And on a long trap, it's okay to enter because I was expecting prices to come down. We just needed for them to get a nice trap, and there it is. And so when those prices broke above this bullish bar first and then turned around and broke out the low side, you could have waited for this bar and gone short below it. But on a trap like that, you can actually put your stop one tick on the other side of that bar, which is where I would have entered, where I did enter on this trade. I actually took this trade as well. This was my last trade of the day. And you can see this trade would have got you short before the big sell-off, and then you could have ridden down the rest of the sell-off for the day. But even if you exited down here, no reason to exit down here yet because prices got below this double bottom, tested it 2 or 3 times, and then continued to sell off. So if prices would have made a positive bar above this and a break above that, I would have exited for sure. But since we went right on through that support area right there, that double bottom, and we pulled back and tried to test it a few times and could never close back above it, that's a sure sign that maybe we're still going to go lower. And you can see prices did sell on off down here to a new low, and prices are still going lower. We got a little pullback going on now, but that was enough reason to stay with this trade. And if you entered there, entry was around 54 again, 54 something, and you could have at least ridden this down to 45, maybe even 44. So that's a good 8 to 10 point trade. You only got to catch one of those each day to make a nice living trading. And that was really the setup of the day, coming off of this high right here. And it was a nice trap. And so hopefully you caught that trade. Hopefully you see that. Hopefully you understand why we didn't want to go long, because this was the first break of this trend line that had been holding. It was validated. So we know we're very likely to get a retest of the low. So that means we're going to come back down here and try to test this double bottom again at the very least. And you can see that's exactly what happened. All we needed was a good setup, and this trap right here, this break higher, that was it. So you had your new high here, count 0, you pull back, there's your first entry long, there's a second entry long, and this was really a third entry long off that high. If you count your new low here, there's your pullback, there's your first entry long, there's your first entry short, pull back again, there's your second entry short, but there just wasn't a good setup because there were too many overlapping bars here, and you would have had to go short either below this big green, this bullish bar, or you would have had to go short right there below. Even if you went short there, we then had 3 or 4 overlapping bars there. And so it just wasn't a good setup. So by being patient and waiting on that trap, when we went higher a third time there and couldn't get any higher than this high right here and turn back down, that's a great place to go short. And so that was the trade of the day, really. So that's as far as I'm going to go today. We're running out of time. Hopefully you see these setups. When you see trading ranges like this, draw your lines, because it really helps to see things better. It makes this all make sense here when you got this line drawn across here. Otherwise, it just looks like overlap and you don't understand why. But what it was, we were trying to test this. They were trying to reverse this breakout, but they couldn't do it. The market was too weak and it sold on off lower. So this is really just a trading range, and you can see that very clearly. And the best trades are going to be either buying these lows down here or selling these highs. But we were in a downtrend. We traded down into this. Prices were coming down hard when we went into this trading range. So the bias is for prices to fail out the top and eventually continue on down out the low. And you can see that's exactly what happened today. So if you understand price action and price action rules, and you know our rules and why we look to do things, enter where we do and so forth, then all this makes sense. So study these charts, study these lessons, and hopefully you learn something from them, and you tend to see what I'm looking for, and at the same time understanding price action, because once you understand price action, you don't get caught off guard and you don't get surprised if you really understand what's going on. So this is Mac with PriceActionTradingSystem.com, and this is a wrap up of our Monday lesson for November the 14th. Thanks for watching.